All right, everyone, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. If you haven't done so already, give video a thumbs up, comment, subscribe to the channel, or come find Jason on Patreon, or come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, here, so SPY here, nice rally this week. Last week I told you guys we were probably going to have a pivot sometime earlier in the week. And we called the solstice low. I said that a couple weeks ago we may have a pivot point going into the June summer solstice. We got that, and then I said we'd put in a higher low this week, which we have done. I said if not next week, there was a low in, we would put one in early this week, and we continued, and that low from last week held, and we continued higher here pretty much the majority of the week. So Tuesday, Wednesday, Thursday, and then a little inside day there on Friday. Nice little move for the spiders here, still into some resistance though. Still not a higher high until we take out 393.16 on the SPY. And this, if we did take this out, it would be pretty significant because it would be your first higher high with a higher low set up since March. So we came down here, we had a lower high, lower highs, lower highs, lower lows. We tried to put in kind of a high here. It didn't really hold up. It was only one day. It's hard to really count that. But then we made a lower low anyway, and then we made another lower high. Now we came down here and we've made a higher low. So if we take out this higher high, that would be significant to me, and it would kind of confirm the thesis that we'll have a summer rally here or a period of decreased volatility moving forward, at least for a few months. So those would essentially be that would essentially be kind of the thesis moving forward here. So 393.16 also kind of coincides with this trend line right here, this downsloping trend line, which also happens to be kind of a falling wedge pattern. So that's kind of the thesis moving forward. Then you have resistance here at 401 and change. And then if you get through that, I would look about 408 to 410 on the spiders. That would be kind of your big max move here that I see over the next couple of weeks. But you know, there's nothing saying we can't get up there, especially if the volume remains light like it has been. As far as the triple Qs are concerned here, you're right into this down sloping trend line here, the white trend line. It also coincides with the 50-day moving average. So it is noteworthy though that, you know, maybe we have a little pullback here this week. This can get through that, and it's noteworthy that the triple Qs are outperforming the spiders off the lows. So take a look at this. Was the gap down here on June 10th. We're already above that, and we've already made technically a higher high. So this high was 296.58, and the high of Friday was 296.75. So we technically made a higher high here with a higher low. That is something that the spiders have not done. If we take a look there, we're still below this pivot and this pivot. So we technically have three lower highs potentially currently on the spiders. And the reason for that is that outperformance in the triple Qs is the recession talk, right? So if we are going to go into recession, the market essentially looks forward to that and looks ahead and says, well, if we're going to go into recession, that speeds up the timeline that rate cuts will be something that will be on the table, which definitely benefits tech stocks better than your average S&P stocks like financials and energy. You know, remember, a lot of financials make up a much larger portion of the S&P than they do the Nasdaq, as well as energy. Same thing. If we take a look at the XLF, you can see how much pressure the XLF is under. It's still off the lows. It's still making higher lows, and you still have a potential inside bar pattern here with this green bar you're still inside of for a potential move up. But it's definitely outperformed here. You see the broker dealers, same kind of thing. Again, inverted yield curve putting a lot of pressure on financials, and recession talk putting pressure on financials as well. The Dow Transport's another area here that has underperformed. See inside of this, this green bar here basically looks like the same chart as the XLF right now. So these kind of sectors here that are more susceptible to that recession talk are underperforming, and tech stocks and the growth stocks are outperforming right now. Take a look at XBI. Nice move off the lows there for XBI. This thing has been absolutely clobbered, and a lot of shorts in these names, and they're really getting squeezed right now. IGV, we've talked about cloud software, again right into this trend line here, and that's well above that pivot or that gap down from 610 from June 10th. So well above that. That took that out a week or two ago. So that has been outperforming. Semiconductors have been weak, and I think the reason for that is kind of the market's worried about Taiwan. I think that's really all it comes down to here. But they are nicely off the lows and got a bid as well. But bottom line is tech is outperforming currently due to the kind of, the yield curve environment and the, essentially the potential for rate cuts to come on the table sooner rather than later. Anyway, speaking of rates here, so we have an inverted yield curve, 2s and 10s, and I think 5s and 10s as well. But anyways, looking at the 10-year 2S Treasury yield, basically filled this gap. Didn't quite get there, but it acted as support nonetheless. We had a little sell-off on Tuesday, then Wednesday, Thursday, Friday, right back up here. So a nice bounce for bond yields. Same thing on the 30-year TYX. Got close to a gap fill, didn't quite get there. Got a nice bounce. We'll see if this puts in a lower high. I do expect yields to have to do a little bit more backing and filling here, especially on the bigger time frames, but they did have a nice bounce this week, and we'll continue to respect that. We talked about the MOVE index a week or two ago and how that is still elevated, still above the pandemic highs, but you can even see here on the TNX basically getting a technical bounce. We talked about that gap fill, but really hit that 20-week moving average. I still think it needs to do more consolidation before it can move higher. But overall, a nice bounce, and bond yields are strong right now, so you got to respect that. HYG here continues to be weak. It had a nice bounce off the lows. We'll see if it can get above these pivots. If it can do that, it can be kind of safe for a while. Maybe you could have upside to that 77 handle again, maybe 78 if it really gets a bid here. But, again, these high yield spreads are very weak right now. JNK, basically the same chart, and still below all these pivots there. Really going back to earlier in the month. So anyways, let's move over here let's talk about home builders. So XHB, again, continuing to bounce off the lows. You do have a little lower high there, and you took out this little pivot here from this gap on the 13th, so you got above that. So in the near term, they're doing okay. They're holding up. Still a weak chart though, still below the bigger moving averages on the daily time frame. I'd give this the upside bias to maybe 62 if the market can hold up, and the ITB, same thing here. I'd give it the upside to maybe 59 or 60 if the market can hold up and we can continue this little summer rally here. VNQ, same thing. So you got a nice down move. We got above that red bar, and now we're just consolidating beneath this resistance level. So that is, I don't really see anything wrong with it at the moment. It is setting up for a move higher, but I don't see it getting much through 97 or 98. So if we do get another leg up here in the broad indices, this can move higher. A lot of these other charts can move higher here in the near term, but it'll be just that. It's just a near term move. So just keep that in mind. Anyways, crude here. So big sell off this week. I'm sure everybody's heard the rumors about what's going on with that. But regardless, we did have a sell off here on Tuesday and pierced this trend line. Got a nice bounce on Thursday, Friday, but here's that trend line that we pierced. And I think we've basically done technical damage at this point. So, this is the first week where you've closed below that 20-week moving average going back to really the week of December 13th. So that's been a while. It's been over 7 months now that we've been above that 20-week moving average on a closing basis. So now we've kind of done some technical damage, and I think this kind of confirms to me that we're in corrective mode. And again, there's nothing wrong with that. There's going to be really good buying opportunities for energy moving forward, but nothing can go up in a straight line forever. And I've been saying, this for months, that there's too many weak hands in the market that need to get shaken out. This is just something that needed to happen, regardless of what the stories are of why it happened. I'll just leave it at that. But in any case, crude coming down here. It basically touched that 95 level, got to 95.10, got a little bounce there on Thursday, Friday. I still think it probably puts in a lower high and does head lower. But again, there's going to be some good buying opportunities moving forward here. You see the XLE, same kind of thing. Basically stalled out at that 200 moving average. Got a nice bounce Thursday, Friday. We'll see if that puts in a lower high as well. I've got buy levels worked out on these as well. Same thing with the XOP and the OIH there. So XOP stalling out at that 200-day. And then the OIH, a much weaker sector here, as it's well below the 200. But got a nice bid there off that little pivot low on, I believe it was Wednesday. So a nice little pivot there, little tail candle. So maybe that has a little bit of upside here in the near term. But I think all of these are headed lower at some point here over the next couple of months. But there's going to be some really good buy levels there. So stay tuned for that. Nat gas as well. was a little bit of a concern earlier in the week. Put in this big dump candle last week and then really didn't do much, just kind of consolidated sideways. So not what you want to see. You don't want to see this kind of bear flag setup, but then we got a nice bid on Thursday and then a little small kind of inside candle on Friday. So nat gas, I'll give it the upside bias to maybe 6.50, $7 here. In the near term, or maybe 675 or somewhere in that range. I still think this one has another leg down, but it's also going to be a very good buy at the right level. So stay tuned for that as well. Anyways, moving on here, let's just talk about the potash names really fast. So Mosaic, you can see right here, I've actually got it all set up. There's a 50% fib. So if you go back on a year or a 3-year chart here, weekly, you're right into that 50% fib, and that's where you broke out of. So this should be good support here in the near term. You did pierce through that 50-week moving average. I wouldn't worry about that too much, though. This should be good support right here for a bounce on Mosaic. It could head a little bit lower. I could see it around that 38 or 40 handle, potentially before a bounce, but this is a really good area of support here in the near term. So Mosaic actually has a good chance to hold up here, and Intrepid did the numbers on that, and I got about $34. That's going to be kind of the major level here on IPI. So these potash names wickedly oversold here over the last, really 2-3 months. Say going back to April 18th, and I told you guys this would get to, I said about 125. It got to 121, so very close there. I think I said $80 on Mosaic. It basically got there, 79.28, and it's been straight down since then. So those levels worked out really well. But now we're getting into some pretty good buy zones on these. So that's why you don't chase names. That's why you don't chase anything that's vertical. Wait for the pullback. Because if you bought up here, I mean, you're down almost 50% right now. So that's a pretty big drop in just a few months. So that's why we don't chase parabolic charts. We wait for the correction, wait for the pullback. But now these things are actually starting to get into some attractive levels down here on the chart. Anyways, uranium here, CCJ kind of just stuck in this range. Really the big story here for me is you've got this trend line here, but you're starting to kind of consolidate inside of this red bar. So really I'm going to need to see CCJ close above 24.32 on a weekly basis before it's essentially kind of safe, so to say. Otherwise, you still have you do have a bearish kind of inside bar there above that trend line. So this trend line is getting weaker the more you hammer on that. So just be careful of CCJ at this point. But a close above that red bar high would negate it, and that would probably give you a bullish move. Same thing with the URNM. So $65.10. That's going to be your area there of resistance. If you get a weekly close above that, it would definitely be bullish in the near term for uranium. So those are the levels I'm looking at there. Anyways, dollar index here continues to be strong, just powering ahead here. So again, I still say about 108.50 and change. That's a good level of resistance here. Technical, basically just a mathematical level. Nothing really technical about it, but continues to be powering up here. And again, it's driven by yields, but it's also driven by recession talk. So the dollar's really has no bad fundamentals right now. The Japanese yen's doing poorly. The euro is doing poorly. So this is driving the dollar up right now. My only concern is that it's kind of like reminding me of energy a few months ago, where it's a crowded trade right now, and there's really it's almost that the bearish case is that it's so bullish right now that it's almost bearish. So I guess if that makes sense to you. But other than that, it's it's overbought, it's extended, it's getting parabolic now. So I wouldn't touch it up here. You see on the weekly there, it's basically just going straight up. Same thing on the monthly. You're just going up in a straight line there, and that's unsustainable. But for now, it can hold up, and it is putting pressure on a lot of things. One of those being gold. So gold, we talked about how well it's held up with a strong dollar, and finally, it was unable to hold on any longer. The dollar really surged this week, and it kind of just knocked gold down from that 1820 area all the way down to 1720, 1725. So gold getting a little bit of a hit. I think that gold and silver both are going to head a little bit lower here. Silver should be defended at 19 in the near term, but I think the buy levels here are much lower on gold and silver. Doesn't mean they can't get a bounce or a bid here, but I think the long term, the real big buying opportunity is going to be a little bit down the road here. So stay tuned for that. Platinum and palladium, on the other hand, They obviously sold off with everything else, but got a nice bounce on Thursday, Friday, especially Palladium. Take a look here at that surge on Friday. Look where it went, right where it went into this kind of necktie of trend lines here. That really just, we hadn't visited this one in a while, and then this one was broken down and we never tested it again really until now. So this one may stall out here, but a nice little pop for Palladium. And copper also rolled over as well, but got a nice bid Wednesday, Thursday, and then a little inside candle on Friday. This is very, very, very oversold right now, so this should get some type of a snapback rally, at least to that 3.7 area, 3.8, maybe somewhere in that range there in the near term. But I still think the buy level on this is lower as well. So again, metals taking a hit here. And usually when you have the recession, some of these things are, the metals will get hit first, but they also bottom first. So be aware of that. Just keep that in the back of your mind moving forward. Anyways, here, let's flip over to Bitcoin really quick. So Bitcoin finally getting above this 20 moving average and finally making a higher high here. So you had 21,911. We got through that 22,424. I believe that was on the 8th. So earlier this week, nice little pop, got him, above that higher high. So finally, and now you have a higher low as well. So there's your low and higher low. So finally, Bitcoin doing something productive and constructive from a technical standpoint here. Next level here is 22,800, not 889. Excuse me, 22,989. So that would be this red bar high. If you can get through that, I'd give it the upside bias about 25.5. And then if you can get through that, it's about 28.5. So Bitcoin finally getting, a little bit of a leg up here, higher lows, now higher highs, and it's consolidating inside of this little green bar here. So you do have a micro kind of bullish pattern, and it looks like it's trying to take out, it's trying to consolidate beneath this resistance here. So not really seeing anything terrible at Bitcoin in the moment, and if it can get a bid, it'll probably give equities a lift too. So again, kind of going hand in hand with the summer rally theory that we talked about. If we can get that, we can get this higher high here in the spiders. I think the markets can hold up for a few weeks, maybe even into late August. So that's kind of what we're looking for here in the short term. Big picture, I think this market has a lot more trouble ahead, but in the summertime, sometimes you get those summer doldrums, those light volume rallies, and they can kind of float the market up with not a lot of volume. Anyways, guys, going to wrap it up here. Come find Jason on Patreon. Come find me on carnivoretrades.com, and I'll talk to you all next week.